Hey everyone, hopefully you're having a good Merry Christmas, good weekend. My name's Andy, my channel is Finding Value. I'm going to go over some comments. I'm getting a lot of comments, and sometimes it's easier just to respond with a video than typing out a whole long paragraph where everyone can view the video. So someone asked, can you share your opinion on Ely gold royalties? I have got probably an oversized position, but still negative gain due to recent correction. What's the upside potential in your opinion? So gold is still in a corrective phase. I think it's going to end soon, perhaps. Silver already broke to the upside just recently. Platinum broke to the upside recently. So I think it's just a matter of time. It's grinding down on this pullback. And remember, the longer the pullback, the bigger the move to the upside. I think we could see a very explosive, strong move to the upside in gold. I'm going to say $2,500 to $3,000 gold is what the upside is. Now, if we hit this in silver, silver's probably going to be 50. It's going to test that high. And remember, it's probably going to go up to 50 and kind of back test a little bit, bounce off of it, and then eventually go up beyond $50 an ounce. But when this happens, these mining companies, since this is still kind of early in the game and gold or oil is still cheap in relationship to gold, I think we're going to see a big move higher on gold companies, silver companies, royalty companies. It's going to look very good for your portfolio and that you hold Ely gold in it. That's my take. So be patient. Don't be irritated or frustrated if it doesn't go in the next week or two. Just be patient. It's coming. And when it goes, it's probably going to be quick. It's probably going to be moving at a very good clip. So that's one there. Another person asked, t-shirts, cheetah speed higher. If you guys want me, I can buy a machine and do this off a computer. I mean, I am an engineer. I can figure this stuff out. And I can start making t-shirts if you guys are interested in t-shirts. We can do a whole bunch of different quotes. We can do, going higher. I'll put certain logos on it. We can do a Finding Value finance shirt. Cheetah speeds, cheetah's gone wild. Some of those sayings that I say over and over, yeah, we can make shirts out of it if you guys are interested. If you're interested, leave in the comment section that you're interested in a t-shirt, and if we have enough interest in it, I'll go ahead and buy some stuff, and I'll start making some shirts if you guys want to. Going down, there's someone who asked, it's hard to follow through a listening only type podcast, and I'll change my delivery style. So if you're listening to this on a ride to work, if you're listening it at work and you can't really see the video portion of it, then yeah, I'll describe more of what I am describing in the images than what I do now. So thank you for that feedback. I appreciate it. There's a couple other ones here. How do you calculate ratios, or where do you find them? So calculating them isn't too bad. It's just the price of gold divided by the price of oil for a gold to oil ratio. It's just price over price. Now, what I like to see is I go to stockcharts.com, I type in $gold $$ WTIC, that's West Texas Intermediate Crude, and that'll give you the ratio for gold to oil. But I do my charting on stockcharts.com. It is free. Anybody can use it. I am not using anything more, and anything above free stuff that is provided to me, which I think you guys can all use because it's free as well. So stockcharts.com, and if you don't know how to use it, I'll show you one example here. Here's going to stock charts. So type in $gold colon there. See that? $WTIC. And that is your ratio right there. It's at 39. And if you don't know what the ticker symbol is, so you could type in platinum and then see the dollar platinum continuous contract, that would be one there. So dollar plat, it's going up. So that's how you do that. If it's not too bad, and I use charting mainly, and the ratios. You can also just type in if you want like gold to oil ratio, and look at images. And there's a bunch of charts that you can see of ratio images, if that's how you want to view it. And you can see history, and sometimes they put lines on it and whatnot. So that's another way that you can search. There was someone, Andy, what are your thoughts on the S&P, Dow, NASDAQ continuing to rise to at least 2023 due to 0% rates? Yes, it's going to be, the 0% rates are going to keep everything propped up. So they're probably going to be propped up with zero rates. The risk is what if they're not successful at holding rates to zero? Another thing is if inflation really kicks up, they're going to be losing purchasing power in those investments. And some people are going to figure that out. They're going to say, holy crap, uranium, oil, whatever other commodity type investment is going up faster than my NASDAQ, S&P, regular stock, we'll call it portfolio investments. So I would suspect that people are going to rotate their money anyway to those investments when they realize that they're losing purchasing power gains in those investments. So that's one thing. Now here's another comment. Just can't bring myself to buy GoviX. Great deposit in OK region, but the share dilution is a killer. Yeah, share dilution obviously as an investor is absolutely horrible. A lot of the things that I look at are technical based. So with some of these companies, it's difficult to know on a fundamental basis who's going to outperform in the long term. And this is what is really difficult about it, is the companies that are going to perform the best are going to be the ones that have the worst balance sheets today. And I'm not saying the worst of worst. I'm saying they're not going to look very good today, but when uranium goes to $80 a pound or $100 a pound, they go from a zero profit, cash flow, share dilution, everybody's just throwing them in the trash, to a very profitable company. And when your returns on the company are your profit that you make in the future divided by what your profit was. Now, if today they're not making a profit and their balance sheet doesn't look very good, everyone's going to throw that thing in the garbage. What I'm doing is I'm kind of sifting through the garbage, going, all right, what companies have good assets? And when these companies, if we hit a uranium bull market, which we are, granted the timing is the big question, I get it. When we hit it, if these companies are still in existence, which I think most of them will be, they're probably going to return the highest returns, because on a valuation basis, on a dollars per pound of reserve, on all of those metrics, people are throwing some of these companies in the trash. And at $80 or $100, they're making a bunch of profit. What is a bunch of profit divided by zero? It's infinity. A company that's making profit today isn't going to be your highest returner in this bull market. I learned that the hard way in the precious metals bull market in early 2000s. Some of those companies that didn't have very good balance sheets turned out to be the best returning stocks in the bull market, because everyone discounts them so bad today that they throw them in the dirt. Their valuations are in the dirt, and then when they go to make a whole bunch of money, everybody just rushes to them in a big mad rush. So what I'm trying to do is, yes, I hold those good companies. I own Global Atomic, a lot of it. I own Deep Yellow. I own Encore Energy. I own all of those ones that I think are going to do extremely well. But guess what? I'm rotating into what I would consider companies that may not have as good of balance sheets right now. And one of the techniques, and someone's, actually I think Silver Bull, I think you actually used my technique. I call it the free ride. If you don't think the company is that great, if we see very good technicals, we ride it, and let's say we get a 100% gain on it. You can put it into free ride mode if you want to. And a free ride is what I do is I trade into it, I hold it for whatever the chart looks good, where I think it's going to peak out, and then I rotate my cash, my investment base money, we'll call it, that's my own money, and I let the profits ride for free forever. That's one technique that I use with some of the companies. If I see a better opportunity over here, I take that base money, leave the profits ride, and put it into another investment because I can read charts. I'm not saying I'm the best chart reader, but I think I'm okay enough to do this type of technique. So I think it's more important to get a good spread on all of the companies that could be successful and get some money into them than it is to have a bunch in one or two and have nothing on some of these other ones. That's my take on it. You guys can do what you want to do, obviously. But I want to capture whatever gain. If Goviax or Laramide or some of these other ones, if they're the biggest performer, or Bannerman, I want to have some money in them. If I lose a little bit on some of my investments, I'm okay with that. But what if that's the one that's 1,000 bagger? What if that is? Could you imagine kicking yourself in the butt going, damn, that was 1,000 times my money, and I missed out on it? Well, this other one only went up 50 or 100. I know it sounds ridiculous. We were talking like this is just absolute in the bag 50s. So it may not return that much. Maybe it's 20. Who knows? Or less. It says, I can relate a lot to your story. I'm very happy. I'm considering doing a stock investing course next year with a main focus on technical analysis and short-term trading, but it's $11,000, not so cheap. You know, if you guys, I can run a training session through Microsoft Teams if you want to. I can teach you the technical analysis side from my perspective if that's what you want to do. I can teach you candlesticks, what to look for on like daily candlesticks, what my approach is looking at a chart, resistance, support levels. I can go through all of that stuff if that's what you're interested. And I can set up, maybe it's like a weekend for a couple weeks or something, classes, if that's what you want to do. Obviously I'm not going to charge $11,000. You guys can, I don't know, maybe I'll set it up some way where you can donate money to a channel or something like that, and I'll do it for you guys. If you like my technical analysis, you don't have to do it. There's a lot of different ways to read charts. The way I do it is I'm not trying to rely so much on all of the gizmos that today has, like clouds and all this other stuff that people do. I look at it and I look at momentum in the charts using candlesticks, and I look at chart patterns where they're going to break and whatnot. So mine's pretty easy, and I think you could learn it pretty quickly. It's probably only going to take, I don't know, maybe 4 sessions or something like that, and I could probably throw it together if you guys are interested. Let me know in the comments section if you guys are interested in a technical trading course. Put it in the comments section what you guys want to learn, and maybe I can throw something together. So that's good. And Merry Christmas to everybody. I'm getting a lot of good feedback and a lot of comments on having a Merry Christmas. So thank you for that, and Merry Christmas to yourself, obviously. Moving down on the comment section here, and thank you for all the great feedback. I appreciate it. Yeah, Open Door is OPEN. It just went a couple days ago. Open Door is another company that could change the industry. I'm heavily invested in Open Door. I think it's a great company, and if you don't have it, I mean, that might be one to look into. They're an internet buyer of real estate. Perhaps it doesn't work out, but I think they're gonna, if that's the company that's gonna make it work, I mean, if an iBuyer is gonna make it work, Open Door is the company I think that's going to do it. Uranium, it says, why is uranium a high-risk stock apart from potential black swan incidents? So when people think of high risk, they think of high volatility. Uranium, precious metals, some of these companies that we are in are extremely volatile to most people. And especially if you're playing the individual companies aspect of it. If a company's gonna go up 50x, it's gonna have high volatility. So when I respond with high risk, I'm referring to high volatility. And if you're not geared or set up that way emotionally, volatility works great to the upside. It's an absolute BITCH on the downside for most people. They don't like seeing an account go down 30, 40, 50%. Some of the companies I'm in, they're down 50% from their highs that are gold, silver related. I've been holding them the entire time. I'm not as, it doesn't bother me because I've seen this so much, and I know the tailwinds behind us. I am very convinced that gold, silver, and commodities, they have to go higher because of the market conditions. If you don't have that type of conviction, I can see how it would be extremely difficult to hold these companies with that volatility. So that's what I mean by high risk, is high volatility. Here's another question. Thanks for some great info. I got 2 general questions that I hope you will answer. In case of a recession or crash in the overall stock market in 2021 or later, will this influence uranium stocks? Most likely it will. If there's an entire market crash, which I don't think it's going to be an entire market crash because usually that's tied with real estate. If we see real estate crash, and I don't think real estate's going to crash overnight, it's not going to be like this and all of a sudden it's crashing. Usually it takes some time for it to crash. Although, I'm going to give you one caveat here. The government has been inventorying this stuff on the side, saying, oh, we'll do all these programs and inventory the problem on the side and kind of try to paper it over. If they don't paper it any longer, it could hit all at once, which is not a good thing. Now, I don't know what the exact ramifications of that will be with all of it hitting at once. I don't think it'll be anything near the '08 crash. But real estate is the thing that will cave everything in. That's why I think uranium is going to be very good, because real estate's that inflationary push behind everything. And I think real estate's in a very strong position. It's never been this strong in history. So that's the current data that we have today. Obviously, we'll have to monitor that data on real estate and ensure that it's going to continue to be strong in the future. The other question is, it's a bit tricky to know if a company is a developer or explorer. Well, in uranium, they're almost all explorers and developing mines. There's very few in production outside of the big guys. Kazatomprom and Camco are producers. There's a couple of others, and then really besides that, there's not much. So the majority of them are explorers, and they're developing mines very soon once the price gets into what I call their sweet spot for their costs. So that's probably around a $50 to $60 price range per pound, but I don't think it's going to stop there, because these mines aren't just going to come on in a year or two. It usually takes 3-4 years for some of these faster to come to market mines to hit the market that are already prepared to come to market. So I have a feeling that we're going to see kind of a slow move in the beginning, and then it'll start moving pretty quick after that. More of a spike up. So, but most of the companies that we cover are explorers, and some are developing mines currently, or are about to develop mines, like Bannerman. Let me see from Trendline. Here's another one. I'm really tempted to selling. However, this person has thoughts of rebalancing the portfolio. In terms of my uranium portfolio, I've started with more or less equal position with slight overweight on energy fuels. However, recent run-up made it 45% of my portfolio. I own 7 uranium stocks in total. How would you act on it? Leave it be or let the other catch up with UU, or do some rebalancing? See, this is where it gets difficult to give you guys the perfect answer, because I don't know which companies are going to be the best in the future. My take on what I'm doing in my portfolio is I'm just letting them ride. If one gets outsized, SM Energy in my portfolio, given where it started, is humongous, because that one's up. I think it was up 350% or so. Maybe it's 300 now. I kind of lost track. Even base load's getting pretty big in my portfolio as well, because I put a lot in there, and it's going up since I bought it. I think I'm in around, like, my cost base is around 27 cents to 29 cents, somewhere in that range. That's when I was loading up. So that one's gotten pretty large as well. So my portfolio, which is kind of weird, is I've got a whole bunch that are well over 100%. Even Nova Royalty's over 100% now. That's quite good. But I've got all these ones: Encore Energy, UU, Global Atomic. They're very outsized, and I'm just letting them ride. I'm not doing anything. What I am doing is I'm adding new money to companies that are in, like, let's say, silver, or other royalty companies that are down in the precious metals area. So I've been just letting things ride. I'm not going to touch it. I own QEP that got bought out by FANG Diamondback. I'm going to let that one ride as well. I know I had some questions there. So this is not, you can do what you want to do. I don't think there's a wrong answer here. I'm just letting them ride. That's what I'm doing. You don't have to do what I'm doing. I don't have all the answers here. If you see better opportunities out there that you think are better, I would probably swap the money over. The problem that I'm getting into when I see is there's so many opportunities, and I still think the ones that I'm in they are still such a great opportunity. I'm just going to let it ride. Nothing's changed on the uranium to gold ratio front. A lot of these things, that is just me. That's my preference. If you think it's getting too big, trim it back, put it somewhere else that you think might be a better opportunity. That's kind of my take. Let's see if there's anything else. So here's another one. But fundamentally, in my opinion, they are night and day. Global low-cost producer. Goviax is high cost. Glow dilution protected. GXU, not the best track record there. Both in Niger, though, so market treats them as one. It is possible that fundamentals don't matter at all. Well, the fundamentals matter. The global looks better, yes. And I own both these companies. Global Atomic, the companies that have better balance sheets protect you from downside risk. That's what's good with having a better balance sheet today, about making money today. Global's not going to be, from this point right now on, it's probably not going to be the best performer of everyone in that sector, because everyone's starting to pile into it, which is making it less, the value is less than it was before. It's becoming less and less of a good value. Now, the thing that's good about Global is the probability that it's going to go into production and be successful is very high. So that is a good thing and why you'd want to buy it. It won't be the best, my guess is it won't be the best performer, because you're going to find one that's in the dirt right now, like Bannerman Resources, or maybe Goviax, or some of these, where people are giving it a very large discount in relationship to Global on a dollar per pound basis. So it's very difficult to know which one's going to be the best performer, and the best performer is going to be a high-cost performer. It's not going to be a low-cost performer. Because when uranium does go up in the future, its multiple on its profit today, which is zero, is infinite. You know, it's an infinite gain when they go to sell and are profitable in the future. So the high-cost producers are the ones that return the most in the uranium bull market. It's just from here to that price, what's going to happen? That's your risk. So you guys are right. Fundamentally, they are better, global. But are they the best value right now? I don't know. I don't know if that's... I don't think they'll be the highest returning in this next bull market unless they get a very large pullback. So what I'm doing is I've already positioned well in the ones that are going to do well for the uranium bull market with the highest probabilities. Now I'm looking at the lower probabilities and the higher risk stuff to spread some money out into, just in case they might be that 1,000+ bagger. Just in case, because I want to capture all the gains I can. You know, I bought Laramide recently. I bought a little bit of Goviax because the chart looked really good. I'm looking at Sky Harbor. I'm looking at Standard Uranium. I'm looking at these ones that are down there just to get some in there, just in case they're the ones that absolutely tear it up. So this is me answering a lot of your guys' comments all into one video. Hopefully this isn't too long. Appreciate you guys listening. Give me a thumbs up if you like this content. Leave comments on those questions that I've asked. And if you haven't subscribed, please subscribe to this community that we're building here. I think it's a very good investing community. We've got some guys on here that are, and girls, that are very knowledgeable about investing. And when we look across the entire spectrum with everybody looking, you know, eyes on charts, eyes on companies, doing fundamental analysis, put your picks in the comment section and we can help everyone find companies to populate our portfolios with the best, highest quality companies for this commodities bull market or even technology sector bull market that you see has that could potentially have outsized returns. So this is the channel to be on. Subscribe, and this is Finding Value. Thank you.